Jay Meisel here, February 21st, 2014, current time 11:35 GMT with a daily Forex trading outlook. In today's case, I think we are going to discuss maybe a broader look at the markets and we can figure out what's going on and what the risks are lying ahead, since the markets are basically dead here for the extended Easter break, and it's Easter Monday today. Now, if you look at, just take the euro dollar on the year at 138.13 currently, it's up 40 pips in 4.5 months, which basically means it's unchanged. We're now in a situation where the ECB is paying more attention to the value of the euro. They've told you if it goes higher, stronger, they're going to ease monetary policy to knock it down due to the deflationary impact of a strong currency. I don't know why they haven't done it already. It makes, I've been writing about this at the beginning of the year, that's a logical move, but so far they haven't. But if they're going to knock it down, if it goes higher, why push it higher? So the question is, why is it higher? Right? Why is it up 40 pips and not down 400 pips on the year? As most forecasts are still for a weaker euro, and one reason is probably capital flows that have been going into peripheral bonds for some time now. And that's the best explanation of market, which is really lacking the speculative punch, and it has to be capital flows, which have been keeping it up. But as I said, if the ECB is going to knock it down, why take it up? Only above 139.67, the 2014 high would change the view, and probably above 140. But as long as 139.67 is intact, you assume that the high for the year is in. That's my view anyway. Dollar yen, it's confounded. Dollar yen is weaker. Why is it weaker? Probably because the Bank of Japan has so far not cooperated by easing monetary policy or giving any hints of it. The expectation was when the consumption tax was hiked on April 1st, you'd see a more dovish BOJ. It hasn't happened yet. The market is bullish. Dollar yen still sees it at 105 to 110 at a minimum. So it's just a matter of, it seems like it's biding its time. But if it stays above 102, then you're going to have to assume the risk is going to be to 105. Below 102, then it may be a different story again. But that's how that stands. So where are we here? We're sitting in kind of limbo. And the third factor is U.S. interest rates. Though Yellen was dovish, as she continues to backtrack from that comment at I think it was the last Fed meeting, which drove the dollar higher. I'm sorry, and bond yields higher. She's been dovish, but just remember that the market is in its forward guidance. We think is a joke, but it changes with the wind, and the market's going to be sitting there waiting for U.S. data to see if it changes its expectations when the Fed might tighten. Markets are going to work on expectations, and the hope has been that the U.S. economy would accelerate in 2014, especially if it gets past the winter, and that would change expectations of a sooner rather than later Fed hike. So you have three things here. You have the ECB capping the euro dollar upside, BOJ so far not cooperating, but the market bullish on dollar yen, and the market waiting for better U.S. data, if it ever comes, to move up expectations of a Fed rate hike and make a case for a stronger dollar. That's how I see it anyway. As far as data goes, U.S. data coming off the winter slowdown is likely to improve, but you've got to go beyond that, probably to maybe even June, to the weather effects. The weather rebound is over, to see whether the economy is going to go closer to 3% as many predict, or closer to 2% as the minority seems to think. So where we are in the euro dollar, look at here. This is your daily chart. Quickly, you got I have the 20-day at 137.97, the 50 at 137.82, and 137.16 as the 100-day moving average. If you look at the chart, you come off this high, the 139.67 high, we came below 136.70. We've been within that range. We made a lower high at 139. So this is why this is a very important level, and this is a very important level. If we take out 136.70, we can see the high is in, and we have a downtrend. If we took out this 139-ish level, it would say we are now not moving into a downtrend. So I would say 136.70 is key on the downside, 139 on top. We're consolidating within this range, and when that happens, 138 is going to set the tone. If 138 ever becomes resistance, then we make a range of 135 to 138 rather than the current 137 to 140 that many have been trading. I'm not going to go into the 1 hour chart right now. You can see how we've gone sideways here between 137.90 and 138.65. That's your tighter range right now, 137.90, 138.65. You're going to have to watch data. More important data looking forward, since we are looking forward, is the following week when we'll have an FOMC meeting, and then we're going to have at the end of the month the flash European PMIs, inflation numbers, and that's going to be, CPI is very important. That's going to dictate what the mood is going to the following week, which is May 8th, the ECB meeting, which might be the crucial two pieces of data, the CPI and the ECB meeting coming into May. That's it for now. One thing on the bottom of this chart here, you're going to see something called my trading tips. These are I developed these over many years. You can get access to them. They're things you might not find in a trading book, and they actually may change the way you look at trading. A real common sense approach, but you'll find some very unique tips in there. If you want to, just click on the link at the bottom of this chart. We'll do a daily update when the market really resumes on Tuesday, but you see my view for now. And good luck and good trading, and just click on this link.